Hello, this is Milo Hamilton coming to you from Austin, Texas. I have a company called Firstgrain, and we try to analyze the world rice market, all the variables, and put them together in a way where it can be a hedging benefit to every seller and a help to the buyer. Um, I've been in business for almost 40 years. I bought rice for 18 years, and then for the last 20 years, I've been an advisor to companies and farmers and so forth. I want to give you an idea of where we think the rice market is right now. It's a big world, and there's a lot of reason to be confused about things, but I'm going to try and simplify it in this talk to two things: how the world works for rice and the market, and what you can do about it in terms of controlling your risk profile as a seller. Um, we live in the Western Hemisphere, and we grow rice here in the Western Hemisphere. We compete with South America, and we compete with one another. We also compete to sell into Africa, Europe, and the Middle East, but so does Asia, and they have much lower prices. So basically, right now, our market is largely in the Western Hemisphere. And the problem 2 years ago was large crops in South America, which stole a lot of market from the US, and we had to grin and bear it. Not so much right now. I love this quote from a farmer I know named Vernon Thwaite. It sort of summarizes what we control and what we can't control and makes it a little more humorous, shall we say. I'm going to plant the crop. The good Lord is going to make that crop come up and grow. I'm going to water it, and the water runs downhill, and then we're going to harvest it. Some of the things we can control and what we harvest and do, and some of the things we can't. It's the same thing with the market. There are things out of our control and things within our control. Managing the level of risk we can control. We can't control what these big suppliers of rice do out in the world market, but we can watch it closely, which is what we do, so we can take advantage of it. The mistake that was made in 2019 was people were worried about the low prices in Asia. They didn't pay enough attention to what's happening in South America or in the US. And as a result, some people may have sold a little early, but my clients were to sell slowly and sell at profitable prices or just wait. The rice market is like a stool. The rice market sits on a stool. It's what I call a market stool. If you get any of those legs wrong, your price forecast will suffer. We've got South America, we've got Asia, and we've got trade deals, which are getting awfully complicated. I'll try and talk a little bit about them. I talk about them in my annual letter, which I can send all the listeners today. Let's talk about the big leg, which is Asia. That's where most of the rice is bought, sold, and consumed, and competes with rice out of the Western Hemisphere. Half our rice is exported, so exports are a big deal for the US. Things are breaking apart in world trade, and our rice trade and price is in the hands of three very strong leaders: Trump, Xi Jinping, and Modi. Who would have thought 15 years ago that these three gentlemen would be doing a lot with the rice market and other markets as well? So you can think of the rice market is controlled largely on the commodity side by China. And this is a quote which I think sums up the problem. The Chinese overfinance, and then they overproduce them, and then they sell the products at a loss. They do it for steel, cement, gasoline, electronics, cellular technology, cars, plastics, and rare earth metals. And that sort of summarizes the rice market. China's oversupplied the market with rice and is selling it at a discount to what they grow it for. This is a quote from an author of a book that's coming out in March called Disunited Nations. And Trump doesn't like what the Chinese are doing, and I second his emotion. In China, it appears that things are very bearish. Huge stocks, rising stocks, in China topping out at last, perhaps up here. I don't know for sure, but the the trend in the rice production is up, and the trend in stocks is up. In a normal economy, you'd never see this, but China does this with what they produce and just keep increasing it every year. We don't know for sure if their stocks are right. That's why when I look at the world market, I look at it with and without China. And that is the way in which USDA handles it, and it's a very good way to handle it. So we don't know about China, but their stocks are 60% of world stocks now. India makes more sense. It had bad weather for 20 years back in the 90s up to the 2000s. And then they had good weather, generally good weather, with very few monsoon failures. And that happened, that shift in the weather started about in the year 2000 and is continuing up until now. They thought they had a bad monsoon, but it looks like it turned out okay. But notice that the stocks level, although they're up generally, are quite variable. And they were much lower here because they had bad weather and they didn't have the production. They were below trend on production. Over here, they have wide swings in their stocks, and that affects world trade. The value, the size of their stocks in India. That's the way it should look. The other chart doesn't make sense to me, but that's. Here's the problem with Thailand and India. 50% of world trade comes out of those two countries, but the problem is that they are losing their handle on water. Whereas in China, although there is some water problems in the north, there's generally an increase in the south. So China is making headway with a water plan to move rice water from the south to the north, whereas India is really not doing a whole lot about their situation. It gets worse year after year. But the metric I watch is the relationship of stocks and countries to world trade, because the world trade determines the world price on the world market. And what's been happening since really 1990 is that stocks to trade have been moving down as world trade has moved up. With China stocks going up, there's been a bit of an uptick, but not dramatic. We're back down to a world stocks to trade level of 1960. So if anything should happen in the market, we're going to see that in the price, because our stocks are so low on a relative basis to trade. That's my theory. They've just been going down now for like almost 3 decades. America's leg is South and North America, and that's a leg of the stool, which is America's. This is a chart that fascinates me, but doesn't seem to fascinate other people. When the downtrend line, the red line, breaks, the rice market tends to double or triple in price. I don't see my way into that forecast yet, but I do believe we've broken this downtrend line, and I'm watching it like a hawk. As I did over here, as I did over here, as I did over here. This is not my first rodeo. The interesting thing is that although U.S. is small in total exports and is small in production, it's a big share of world trade in paddy or rough rice intercountry. Brazil 2 years ago had a lot of rice and unloaded a lot on the world market. Now their supplies are going down, and the other countries just don't have hardly any rice. Paraguay sells a little rough rice. They sold some to Mexico recently, but it's not a large part of what they do. Most of their rice goes into Brazil. So other than the U.S., no one has rough rice in large quantity, and there's going to be a problem on stocks in the Americas, U.S. and South America, and the stocks are going down to one of the lowest levels in 30 years. And in addition to that, world trade's going down because the Western Hemisphere can't compete with Asia on the price levels that now exist in the world market, and are cutting back production and getting out of the rice business. And if this doesn't turn around, we will see a contraction of world trade in rice out of the Western Hemisphere. But I'm slightly optimistic because the last time we had this kind of a stocks drop was back in 1995. Our price went up for a year. In 2003, we had the same phenomenon. We had heavy shortfalls in South America, and our price in the US went up. We have finally gotten back to that level after a period of bumper crops and large increases in South America that have glutted the market. It's now coming back into balance. Indeed, I would say we're short of stocks, and our world trade is down to an extremely low level. There's not much margin in the Americas for any surprise demand issue coming from weather. Now, one of the things that's a little bearish is that the inverse of the dollar is been going down. It's going up now, but it's been going down. If this continues to go up, that will support the price. If it goes back down, if the dollar gets stronger, then we're going to have a problem as we move down the line the next 30 to 60 days. I'm watching this as a bear market issue. So right now, the price in Brazil is fairly flat, although the price in local currency is going straight up. Why is that? Because the real is losing value, so it doesn't appear that there's this bull market. We are moving to the highest price for Brazilian paddy in ever. And our market is sort of moving up with it because we're short. We're short of rice. Venezuela's the prize. Paraguay has sold some rice to Venezuela, but I don't think that their needs will be covered out of Brazil, that's for sure. So we'll have to see what happens. That's a 500,000 ton market. Our business to Venezuela has gone up materially over last year. I think about 146,000 tons, so much in this marketing year, and it's not over with. And our rough rice exports have been very strong. Here's another bear issue that you must take into account, and that is that in terms of soybeans, rice is up at one of the highest levels in the last 2 decades. And it is due to the fact that the soybean price is very, very weak because of the trade issues. If that soybean price stays down and our rice price keeps moving up, which I think is possible, we're going to see a huge increase in acreage in the Delta. Now, I'll just point one thing out to you. We have short stocks in South America, so unlike previous periods where our acreage went up, it may not be as bearish as it looks right now, because 500,000 acres in the world market is not much at all. Both corn and beans are devaluing relative to the rice price, however, as we go into decisions. Maybe 10 to 20% of that 30%, that 10 to 15% of that 30% increase that we're talking about over here in 2021 could move back out again. Last year, we thought that the acreage would be way up because the bean price was high to rice price was high to beans, but we had a flooded crop and the acreage went down. So even though the bean price and rice price are important, so is Mother Nature. Mother Nature can intervene, and it can intervene again this year. The big picture in Asia and the Americas rice is that it has a rounded bottom. I believe that the Asian market is bottoming out, and relative to the Americas, the price is very high in the Americas because they can't grow the rice for the price they can in Asia because they get these cheap inputs and all of these billions of dollars of subsidies. I hope that Trump can make some headway on this issue because it's a subsidy mess out in Asia, particularly for subsistence crops like rice. They subsidize the hell out of it. So, sum it up, improving your pricing by knowing the parts of your revenue returns. Break it out just like a banker does into a spreadsheet with movable parts, which will determine what you get for your rice overall. We could have a high and low prices in the spring. It's looking like we're into high prices into the spring period. We have 5 income elements. We've got the PLC, the price loss coverage. We've got crop insurance, cash, options, and futures pricing, basis, very important basis. I'll talk about that at the end. And the marketing facilitation payment for the trade dispute, which has caused a lot of problems with prices in the U.S. for farmers. Pricing your rice in percentages over time based on price outlook. Be grateful. The way you become grateful is to sell some rice. Don't hold it back. Okay, so you need a toolbox. And that toolbox is a mental toolbox of the mechanisms you can use to improve your revenue every year. You have the price loss coverage that you can't control. It just chunks out. You got the market facilitation payment. Hopefully we'll have a third one. Hopefully it's temporary. We don't know. Then you have crop insurance under certain conditions on uncertain farms. You need a good broker for insurance. Then you need a good broker for futures and options so that you can make cash sales and take advantage of basis. You need to become proficient in how to use each pricing tool I'm going to point out to you in this box as an example, moving into the spring. Okay, so we're moving into the spring. We're trying to price our crop. Maybe 20 to 30% of it's not covered by the farm program because of yield change and the 85% of full coverage. So you're exposed even with the PLC on a portion of the crop that you grow. If the price is high in the spring as it is now, you can sell the futures or buy put options, which is the same thing. And then if the price goes down, you'll make money from your futures hedge. You'll make money from crop insurance, assuming that we can get crop insurance in February. But the September contract is fairly large and it's trading 10 to 15 to 100 contracts a day. That's good news for crop insurance. You've got $1 payment for the PLC coming your way if the price goes down. The rest of the crop will be sold at lower prices. Okay. There's no holy grail, no silver spoon, no single thing that's going to make money for you. If the price goes up from the level you sell it at, you will have made money on the hedge. Now it's a short hedge, so there will be margin calls, but if you priced in at $12 to $13 and you can make money, you've got money on that portion that you covered. You have no insurance payment because the price went up. You have no PLC payment if it goes above $14. The rest of the crop is sold at higher harvest prices. That's actually a pretty good outcome. Now, if you have low prices at harvest, then you have an increased PLC up to 20 to 30% of your total production, offset by futures losses on a position if you buy the futures market. No crop insurance payment, never had the opportunity. Rest of the crop sold at lower prices. Now, if you low prices in the spring and the price goes up, then that will erode your PLC payment, but it'd be offset by long futures or call options gains. You've still got no crop insurance, but the rest of your crop is sold at higher prices, which is not such a bad deal. Okay? You should be watching your local basis all the time, but if you don't know what the basis does during the year in your area, you are at a disadvantage. We watch the seasonality in the basis. For example, in Texas, this was a good time to do some selling. The basis hasn't been all that dramatically active in Arkansas. You should have gotten out of cash rice into futures, and people did do that, and then out of cash, and then use futures to ride the trend if you so desire. And it's collapsed. It recovered recently because the price went up $2 a hundredweight in the last 2 weeks over there. So this is the Gulf Coast, Arkansas, the Mississippi River, if you're over in Mississippi, the CIF NOLA price, and the barge rate, which seasonally weakens during the winter when the grains get bent down. Okay, so we have an indicator we watch, which is the MACD oscillator, and it breaks the price into rhythms or cycles in the price. When the market gets up to this kind of a condition on this particular metric, it may be a time to look at increasing your selling on the market. We haven't reached there. We think there's more potential in this market. It could go here, it could go here, but generally speaking, when it gets up to about 60% on this indicator, we should be in a topping zone. So watching that like a hawk. We have sold most of our old crop, and we're trying to get 20 to 30% of our new crop priced at profitable levels on the September or rolling it on. Is there hope of profitable prices for rice? 7 questions that you should consider, and I can't discuss here, or my talk would be double the length that it is now. Okay. Number 1, will Trump reshape global trade? He has a bold ambition to take the uneven playing field and level it for U.S. farmers. We've never had anybody really caring that much about farmers in the U.S. They care more about the poor, starving Indians and Chinese that are not really that way, that subsidize the crap out of their market. Will rice production decline due to unprofitable prices? Corn is becoming more effective than rice because rice can't use GMO. Globally, the yield for corn has gone up 10% versus rice. People want to get out of rice. Some countries, they're forced to grow it, like in Vietnam, because they have a rice first policy and they want you to grow rice even though they can make more money growing other things. Can China keep growing rice on contaminated soils? It's hard to say, but I think an awful lot of the rice that's in store in China, 60% of the world's rice, is not particularly tasty, shall we say. Could climate get more variable, cold or dry? We don't know, but climate, people think, is going to get more variable, whatever side of the temperature equation you may be on. Will China buy U.S. rice and buy long grain? Really what China needs is long grain, not medium grain, although people say it's going to come from California. All of the rice brought by Japan is long grain, is medium grain, because that's what they eat. But in China, they eat long grain. And I think that if rice were able to make it into China and it had the kind of plan of soils and marketing and everything, it would sell very well over there because they know it doesn't have the kinds of contaminations caused by mining and agriculture being mixed together, cadmium, arsenic, all of those things that are in the soils over there. Can India export rice if the water issues deteriorate? They will deteriorate. India is not capable of doing very much. It continues to boost its pork price. They continue to grow rice. They shouldn't grow rice. They shouldn't export rice. But that's what they're doing. And that's it. If any of those things start to happen, the level of world rice prices is going up, not down. Thank you very much. If you got any questions or any further comments, just let me know. I appreciate your time in speaking to you.